What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put at least $100 in that brokerage account. They're going to give you 12 free stocks for just trying out the brokerage app. There's a link down in the description box of the video. Click on that Webull link. Open up your new Webull brokerage account today. Go get that free stock. Go get that free money. I'm going to send you a Webull tutorial video to walk you through how to make your first trade on the Webull app. All you got to do is send me a DM on Instagram at RichardFain28, and I'm going to send you that free Webull tutorial so you can get started building wealth. The Fed has sent a confusing message to the American people. In April of 2023, the Fed said we were going to have a mild recession. Fast forward to July of 2023, the Fed says there's not going to be a recession. Are they lying to us? Should we be actually worried about a recession? And it's always better, guys, to prepare for the worst, but expect the best. And I think that's where the Fed's mindset was let's make sure we prepare the American people for what's coming, because we don't know if us increasing these short-term interest rates is really going to get inflation down to a point where we don't have to keep raising interest rates. So I think that's the mindset of the Fed was, let's prepare for the worst, but expect the best. From April to July, the Fed increasing short-term interest rates really had put a major dent in inflation. We got the July CPI report, and we could see where headline inflation was at 3.2%. Core inflation, 4.7%. That's why the Fed came on record in July and said, hey, we don't believe there'll be a recession, so that the American people could have a sigh of relief and get back to thinking about their lives and not worrying about having anxiety about an upcoming recession. I also asked myself, all right, well, what caused them to change their mind between April and July? We know they raised interest rates, and that definitely was the main factor. But also a big contributing factor, guys, was the labor market. Back in April of 2023, the labor market was adding hundreds of thousands of jobs to our economy every single month. In July, that cooled off. Not as many jobs were added to our economy. So by the Fed increasing short-term interest rates, making it harder for businesses and consumers to borrow money, that took money supply out of our economy. And when that money supply left our economy, the job creation wheel slowed down. That's good news, guys, because now we can refocus our efforts on building wealth, right? We can start refocusing our efforts on getting to our financial freedom and not have to worry about, oh my God, we got a recession coming. I need to batten down the hatches. I need to keep every cent that I have in my savings account because I don't want to lose it in the stock market. I don't want to lose it in a business that would close if we go into a recession. I don't want to lose it in the real estate market because real estate is going to take a 30-40% hit like it did in 2008. See, all of those things are fear. which in turn will stall our economy as well. And the Fed knows that. So they had to come on record and let the American people know, we don't believe there will be a recession in 2023. That way people can get back to the business of living their lives and hopefully building some wealth. Now, that doesn't mean we're completely out of the woods, guys, because nothing is etched in stone. The Fed could change their position again later this year. Who knows, right? We have to watch the data and figure out what inflation is doing. Right now, inflation is going in the direction we need it to go, which is down. But that doesn't mean in September it won't go back up. And that's another reason why the Fed said we're going to increase short-term interest rates at least one more time this year, maybe even 2 times, because they do not want to have inflation go back up. They want to kill it. They want to get it down to 2% and keep it there. And if they can do that, which they believe they can, and provide that soft landing and don't destroy the economy, that's a win-win, guys, for all of us, honestly. So I just wanted to give you guys my opinion on why the Fed is flip-flopping so much when it comes to, are we going to have a recession? We're not going to have a recession. All we can do is plan for the worst and expect the best. What am I going to be doing during this whole time period for the second half of 2023? I'm just going to be invested in my favorite ETFs and my favorite individual stocks to build wealth, man. I'm not going to be buying any real estate until interest rates come down. And I don't expect interest rates to come down until probably late 2024, early 2025, guys. As long as interest rates are high, guys, it's an opportunity for me to be able to buy discounted paper assets. See, paper assets are not going to trade at a premium again until interest rates starts coming down, because sort of that's how the stock market works, right? When interest rates are high, the stock market is typically lower. When interest rates are low, the stock market is typically higher. And the reason that is because when interest rates are low, companies are able to do what? Borrow money cheaply. And they can take that money and invest it in their growth. When money is too expensive to borrow, then companies don't borrow it and they don't grow as fast. And of course, our stock market is just made up of companies. So if companies are not growing, how in the world can the stock market grow? Now, don't get me wrong. We got some tech activity right now in our stock market that's really fueling the little bit of a bounce that we're having right now. That's all tech driven, right? You know, maybe 10 companies are driving all of that in the S&P 500. But for all the companies in the S&P 500 to thrive, typically you need lower interest rates. So that's my 2 cents. You guys drop me some comments down in the comment box and let me know what you think about the Fed flip-flop on the recession. What do you think? If you want them 12 free stocks from Webull, guys, you got to click on that link down in the description box. Open up that new Webull account. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.